India's real estate investment landscape is undergoing a significant shift, with Tier 2 cities now outperforming their Tier 1 counterparts in terms of capital appreciation. According to data from Magicbricks, an online property search platform, the average capital appreciation across Tier 2 cities stands at 17.6%, surpassing the national capital's 11.10%. The analysis covered 19 prominent Tier 2 cities, many of which showcased double-digit year-on-year YoY growth in property values. In North India, Lucknow led the pack with a 23.70% YoY appreciation in property prices, followed by Kanpur at 19.52%, where property values rose to 7,049 rupees per square foot. The average property price in Lucknow stood at 6,880 rupees per square foot in Q2 2025. In Western India, Goa recorded an impressive 64.61% YoY growth during the April to June 2025 quarter, with property values reaching 14,028 rupees per square foot. This positions Goa as a prime example of the high capital appreciation potential in Tier 2 markets, driven by its appeal as a lifestyle destination and growing investments in tourism infrastructure. In southern India, Coimbatore demonstrated a substantial 46.65% YoY growth, with average property values rising to 5,970 rupees per square foot. Market observers attribute Coimbatore's upward trajectory to its consistent development and establishment as an industrial and educational hub. In contrast, Tier 1 cities such as Mumbai, Delhi and Chennai recorded capital appreciation rates of 11.10%, 25.40% and 14.90% respectively. Experts note that affordability, less pollution, emerging industries and jobs, government initiatives are rapidly transforming Tier 2 cities into new growth hubs, delivering strong returns and attracting significant investor interest. Prasoon Kumar, Chief Marketing Officer at Magicbricks, stated that the growing momentum in Tier 2 cities clearly reflects evolving consumer preferences and strategic infrastructure investments. He said, as affordability aligns with aspiration, these cities are offering unmatched value, delivering higher capital appreciation than many Tier 1 markets. From Kanpur and Lucknow in the north to Goa and Kochi in the west and south respectively, the demand surge is being driven by a mix of end users and investors eyeing long-term returns and lifestyle upgrades.
I think the main reason behind this is affordability because when you go to a tier 2, tier 3 city, affordability for the first home buyer or an investor plays the biggest role. You get much more carpet area, which is very difficult in a tier 1 city when you compare to a tier 2 city. Second is the movement of the urban population towards this particular city who are frustrated after the pollution, and you have better opportunities today in tier 2 city. So that plays one of the very key roles today. The third is the government initiative. If you go through major highways, major infra development, which is actually boosting this entire, uh, the tier 2 city coming ahead as a smart city option, which is actually helping them grow as a city and grow as a state. Uh, I think the last option would be emerging industries because a lot of industries, like to give an example of Nashik, it's known for the grape industry, the wine industry, which is developed. So a lot of people are now moving towards that particular city. Same is the example at every part of India. One particular industry is actually fueling the entire economy of that particular city, and because of that a lot of population move to that particular part. So there are, every city has different reasons and it is for good. Today when you compare any of our cities, it's full of people. Like if you say Mumbai or Delhi or Hyderabad, if we have more tier 2 cities, it would be good for the city.
Experts also believe that high prices, lack of bigger houses has led to slow capital appreciation in the metro cities.
I think high prices today, getting anything with a budget of 1 crore rupees, getting a 1 BHK is next to impossible in Mumbai. Now, when you compare with Delhi again, no one is making 1 BHKs because everyone wants to make luxury. Same is with Hyderabad, though yes, Hyderabad is affordable, Bangalore is affordable, but the pricing are so high for a person when he goes to a tier 2 cities, he feels it is more easier and he gets bigger homes. Uh, Market has saturated for sure, and everyone post COVID wants bigger houses. They want greens around them. So that has been one of the driving forces for people selecting tier 2 cities. Secondly, the job opportunities in tier 2 cities have gone up because a lot of big offices have moved to tier 2 cities now. There are data centers and new industries which have developed that is fueling people to move towards the tier 2 city, and that is the one of the reasons you can say metros are lacking behind in capital appreciation.
Another major reason for capital appreciation of Tier 2 cities is the huge savings that investors or individuals are able to make in comparison to metro cities.
There was a report few days back, like, the number of flats bought in Dubai. Say if 100 flats are bought in Dubai, 50 flats are bought by Indians. Now, I wanted to get more into that report. I was shocked to know out of that 50 flats which are bought by Indians, 80% are from the tier 2, tier 3 city. And the cities were Bhilai, Kolhapur, Rajkot, Nagpur, major cities. And I was like, Indian money is going outside. But this is what the power of tier 2, tier 3 city is. People have money. What happens in tier 1 cities, we spend a lot of money in traveling, in your home needs. So the extra money that you have for investment is much lower for a person who stays in any of the metro cities. The saving of tier 2 cities is phenomenal, and this international reports which come out, people from Bhilai buying a penthouse in downtown Dubai, that gives the power of spending that a tier 2, tier 3 cities have, and that can give you an understanding why it is the right time to target tier 2, tier 3 cities, either for development or for investments.
Other cities, such as Bhubaneswar, 19.54% YoY, Jaipur, 21.32% YoY, Indore, 22.81%, and Patna, 17.09% YoY, also demonstrated healthy growth, reflecting widespread positive sentiment across Tier 2 markets. However, a few exceptions exist. For instance, Mysore saw a slight 4.69% YoY decline in capital appreciation, although it registered a positive 2.44% quarter-on-quarter QoQ growth, indicating a potential recovery. Surat also showed modest growth, with only 0.32% YoY appreciation in property prices.
Network 18 decimates Times Internet with over 6 times more unique users on social media. Network 18, the undisputed leader of news networks, way ahead of the times.